I'm Craig Moffett of Sanford Bernstein. I just participated in the Broadband, the Wireline panel for the Broadband workshop here at the FCC. I've been in this business for about 20 years with background both at the Boston Consulting Group, where I led the telecom practice, and now in the capital markets at Sanford Bernstein doing equity research. Well, the wireless and wireline have fundamentally different economics. Generally speaking, it's cheap to build a wireless network, but very expensive to scale it later on. It's very expensive to build a wireline network, but relatively cheap to scale it later on. And so as you can imagine, there's a crossover point at which, after a certain level of usage, it's cheaper to have a wired network than a wireless network. We're struggling with that today because we're trying to anticipate what the levels of usage are going to be. The problem is when you get very long sessions and frequent sessions at high speed, it consumes more bandwidth than a wireless network can provide. And so you can't support the level of oversubscription or number of simultaneous users that you can on a wired network. So you have to shrink the radius of the wireless network, that is smaller cell radii. That means more cells, that means more cost, and eventually wireless networks become economically untenable as competitors. From our view, I think the future suggests that for the true broadband applications, you're likely to see a relatively clear separation where wireless broadband is primarily for different applications and for location-based types of services, and where the real workhorse network will remain the wired network for a long time. As a regulatory model, we end up inevitably swinging back and forth in the pendulum between the benefits of competition, but by definition, therefore, a lot of stranded capital, and alternatively, the benefits of the efficiency of monopoly, but the huge structural costs of monopoly, which are lack of innovation and lack of price competition that drives both consumer innovation and lower prices. I think what the FCC is engaged in today is exactly the right dialogue to try to figure out how can we both leverage our money the most efficiently to try to drive broadband adoption, but more fundamentally, what's the problem we're trying to solve? Are we trying to solve broadband availability to the most rural parts of the country? Are we trying to solve broadband speeds to the majority of the country? Are we trying to drive down prices to accelerate innovation? Are we trying to create new applications like telemedicine? All of those issues are to a degree independent and to a degree interdependent, and there are no silver bullets here. This is very, very complicated stuff, and we're still in the first inning of sorting it all out.